In 2025, the global transition to clean energy is not just a trend. It's a strategic investment opportunity. Why? Because governments around the world are changing the rules of the game. We're talking about regulatory changes, geopolitical shifts, and climate commitments that are reshaping the energy landscape. So let's dive into the details. First, let's talk about what's happening in Europe. This region is leading the charge when it comes to clean energy. This year, the European Union launched several major initiatives. The REPowerEU plan is accelerating the exit from Russian fossil fuels, and countries are focusing on solar, wind, and hydrogen. There is also a new clean industrial deal proposed to decarbonize heaviest industries by 2040. This deal includes plans for subsidies and fast-track permits for green projects. Additionally, energy storage regulations are tightening. Starting this year, all industrial battery systems and EV storage in the EU must meet new carbon footprint and efficiency standards. This shift is not just about reducing emissions. It's about creating a competitive edge for European industries. By adopting stricter standards, the EU is ensuring that its companies are at the forefront of clean energy production and storage. This could lead to significant cost savings in the long run and help drive innovation in the sector. Now let's turn our attention to the United States. Here, the picture is a bit more mixed. On the one hand, the Inflation Reduction Act's clean energy incentives are being challenged, but on the other hand, states like California and New York are forging ahead. For example, the Empire Wind offshore project near New York is back on track despite federal uncertainty. This project, worth $5 billion, will generate enough electricity to power over 1 million homes annually once completed. This mix of federal challenges and state-level action highlights the complexities of the clean energy space in the US, while national policies may lack consistency. Local momentum for renewables is undeniable. Factors like extreme weather events and aging energy infrastructure are pushing communities to seek cleaner and more resilient energy solutions. And this is where the opportunity lies for investors who can spot the trends and navigate this evolving landscape. So now the big question: where should smart investors like you focus their attention in 2025? Let's break it down. When it comes to investing in clean energy, it's crucial to diversify both geographically and by sector. Let's start with the United States. 5 stocks to watch include NextEra Energy, Enphase Energy, First Solar, Tesla, and Plug Power. Now let's explore some top European picks. Ørsted, Siemens Energy, Vestas Wind Systems, and EDP Ren. These companies are at the forefront of their respective fields, driving innovation and progress in clean energy. Now, if you prefer a more diversified and lower risk exposure, consider clean energy. Some popular options include ICLN 10 Fund and QCL. These ETFs track global leaders in solar, wind, and green tech, providing a broader market perspective. Finally, let's discuss the key takeaways. Clean energy is no longer a niche sector. It's becoming the core of global energy policy. Governments, corporations, and investors recognize the urgency and importance of transitioning to sustainable energy sources. From tighter regulations to ambitious targets, the momentum behind clean energy is undeniable. Staying informed about these developments and adapting your investment strategies accordingly is crucial for success. So keep an eye on both local and global markets. Look for companies and ETFs that offer diversification across different areas of clean energy. And always remember that investing involves risks. Thank you so much for watching. If you enjoyed this video, please give it a like and subscribe to my channel. I would love to have you back for the next one. Until then, take care and happy investing.